You say OPTT? Yeah, you know me. That's right, ladies and gentlemen. Did you guys see the stock OPTT today? Pretty wild. I mean, pretty crazy. I know I did one video already today talking about the stock and how you go about finding the characteristics for a particular stock like this. I know I'm not sharing the screen. Don't worry. We'll get there. We'll get there. But anyways, OPTT, pretty crazy. So what I talked about earlier was how you go about finding and understanding the characteristics of a particular stock that can run like this. Now it's on to the backside, the brutal side, the bear drop, right? So let me get into sharing the screen here. Which screen is it? Oh, it's that one. See, when you work 75 hours a week as an entrepreneur, everything just kind of blurs together and you really don't know what you're doing anymore. It's just a chart after another chart. So I want to talk to you guys about OPTT here and really what goes down in this drop. Now, I have done a video like this before, but hey, more knowledge to you, the more power to you, right? I think that's how it goes, or knowledge is power and power is knowledge. Or anyways, I'm not a poet, and that's why I trade stocks. So let's get into the video for real. OPTT, stellar stock, kills it today, and then it gets crushed. Not to say we didn't see that one coming. Anyway, so what goes on in this particular area and why does it drop out like this? Let's make this super simple so that even a caveman could do it. Next thing you know, I'm sued by Geico for stealing their line. So here we go, guys. Ready? The mind blower, okay? This is a stock that had, I don't know, I think to be somewhat close to exact, it was like a 400,000 share float. That means that there was 400,000 shares available for anybody to trade on the open public. So me, you, your pet goldfish, you know, your snake, pet lizard, any one of us could have bought up to around 400,000 shares of the stock, okay? So now we're going to look at a 5-minute chart here, okay? Bear with me, no pun intended, but to get the point, when I hover over these candles, you can look down here in like the little bottom left-hand portion of the screen. So right now on this candle, there was 300,000 shares traded. On this 5-minute candle, 500,000 shares traded. Wait, take a second, slow it down, Connor. They're not going to understand. Okay, 400,000 shares, 400K. That was the float. Okay, we'll just go F. I guess I could spell it out and not be lazy. So float. Okay, that's the float. Open supply, the amount you could buy, okay? 400,000. Look at this green candle right there, the one I'm hovering on. Traded 542,000 shares of volume. Pretty crazy, right? Because that means the entire supply of the stock to the open public was traded in 5 minutes. All of the shares that you could buy were traded in 5 minutes, okay? So let's go forward. Another 5 minutes goes by, another 900,000 shares traded, 144,000, 300,000. You get the point, 400,000, 400,000. You're starting to get the point, right? There's only 400,000 shares to go around, and each one of these 5-minute candles is literally trading almost the entire float of the stock. So then you go and say, well, why does it crash so hard? Well, for one, when a stock is up like big time like this from 5 to 16, you can expect at some point it's probably going to crash, right? But why does it crash so hard? Well, if there's only 400,000, that's a terrible K, 400,000 shares to go around, and throughout this time period right here, 9 million shares are traded. That now means that the entire float or entire supply of the stock has fully exchanged hands from buyer to new seller, from seller to new buyer. So then what that means is if the entire float has exchanged hands multiple times, ready, multiple, right? You bought, then you sold to somebody else, and they bought, they sold to somebody else, they bought, sold to somebody else. That means all of the shareholders on the stock, everybody that owns the stock now owns the stock within an average price from here. From this high And in this range, all the new shareholders now own that stock at around $13 to $15. Everybody who owns that stock now owns it around $15 to $13. So if Susan and Bobby and your pet lizard Tom, why you picked name Tom, I don't know. I would never name a goldfish Tom. You should probably change that name. And then your pet lizard Sparky all started buying the stock right here. And let's say one of those trades was terrible and they bought up here, unfortunately for them, right? Chances are Susan, Bobby, and Tom and Sparky, the lizard, all have a stop loss probably right about here, right? Would make sense, you know, because as we learn as traders, you don't want to take too big of a loss. So you're probably going to keep a stop loss somewhere below your support on the day. So when this thing finally rolls over and breaks down, remember the float is 400,000, okay, maybe 500,000, may have fluctuated a bit. That now means that everybody who owns this stock owns it at a price about 14 to 15 or 13, give or take. And all their stop losses are going to be somewhere around $12 below the support. So when this breaks, Susan, Bobby, Tommy, lizard Sparky, they're all going to cut their losses as it breaks support. So now you have a bunch of people steamrolling over one another to try and get out. But remember, everybody who owns the stock owns it here. So it's literally like a stampede of sellers trying to get out, just piling over one another, getting out as fast as they can. And then they're thinking, when are people going to start buying? When are people going to start buying? Well, the thing's crashing. You're piling over each other to get out. Nobody wants to buy it. The thing's up 1,000%. Who knows what it's up on the day, right? Nobody's trying to buy your shares. The thing is crashing, and you're just piling over top of each other trying to get out. And the reason being is everybody owns the stock right at about the same price. So there's going to be a massive panic when it starts to break down. And there's not going to be anybody wanting to buy your shares when this thing is just crashing. And secondly, there's nobody who owns the stock, not many, because most people sold up here. Not many people own the stock down here, right? They're all pretty much selling up here, giving their shares to new buyers, and all those new shares start to panic out on top of each other, trying to get out. And that is what goes on in these supernova stocks. They are extremely low float. They get pumped up. They get to a point where nobody really wants to buy those shares anymore. They go through consolidation. In this consolidation mode, it's a battle between buyers and sellers. And then through that consolidation mode, new shareholders now own that stock all at about the same price. And all those new shareholders are all going to have stop losses right in the same place. And we'll use a red arrow to signify their stop loss. So all the new shareholders all have stop losses right in this place. This big, massive red arrow. That's where their stop loss is at. So as it rolls over and breaks down, massive panic. And nobody wants to buy this thing as it's crashing. And nobody would want to buy a stock that's already up. Let's see how much it actually went up on the day. Let's see, from bottom up, it went up about 215%. Anybody in their right mind would know a stock that's up 250% on the day, it's probably not something you want to be buying up here and holding, right? So panic out, drops out. So first we went over how you find the characteristics for a big stock, and now you know the characteristics of the stock on the downside and why they drop out so much. And that is the video for you guys. So I hope that helps you guys. I hope you learned something new today, and I hope you enjoyed this little evening lesson with me. I won't be on tomorrow, won't be on maybe even Friday. Not quite sure, but we'll see how the days go, and time will tell. So thanks again for tuning in, and I'll see you guys on the next video.